General Catalyst is an investor in Snap.
We
before you came on board. Is the timing right? What makes this attractive?
So we are investors, so I don't want to say too much that the company hasn't revealed so far, but we are super excited about Snap. Very few companies really get to change consumer behavior as profoundly as they did, maybe 3 or 4 over the past decade. So they're an extremely good company, very consequential product, and just really amazing execution. So I think the enthusiasm for a Snap IPO just really bodes well for the rest of 2017 in technology.
Then we have a company that's exiting, the investors that they're trying to woo at the moment, Alex. How excited, how willing have they been to absorb this sort of data?
So this is a very down time for tech IPOs. There hasn't been a lot of new issuance out there, so that does bode well for the Snapchat listing. And frankly, they haven't been able to make a big bet where there's a lot of shares being offered that promises returns, that promises big growth, which is what Snap is pitching here. And as they kind of cycle through, digging into the S1, looking at the first few pages, the colorful images that Snap is promoting, we do see a lot of looking back on the past development. We don't see a lot of road mapping going forward. There's a lot of strategic vision being laid out, but again, to Sarah's point, when you look at the information that investors are going to digest, you're going to have the numbers, and then you're really going to have to believe the story that the management is pitching throughout the roadshow when you're deciding whether to open up your pocketbook.
Phil, when you were at Evernote, you didn't go public. What are the trepidations as a founder when you're looking to go to the market? Why perhaps isn't there being as much meat to the bones in terms of the future potential of Snap really being put in this S1 right now?
Well, I think it's always a trade-off between access to capital and how much distraction there is. And as a CEO, as a founder, you pick the best combination of that. So where we were at Evernote, at a much smaller scale than Snap and at a different time, it was easy to have as much access to capital as we needed on the private markets. And frankly, going public is a lot of work and kind of a distraction, because then you wind up having to be a lot more open and match Wall Street time estimates. A company like Snap is doing amazing innovation. Like, look at all of the products they've built, their work on augmented reality, the wearables. They probably have a lot more stuff that is in a longer time frame than the next quarter, the next quarter, the next quarter.
And to your point, Snap has said that its performance will be, quote, lumpy, right? That they're going to have to make fits and starts of investments in new products and strategies, and that their DAU growth may not be predictable, their revenue growth may not be predictable.
But it's the addiction, isn't it, as well? When we're looking at 158 million daily active users, it's not so much the number they want you to focus on, it's the fact that they're going back every hour, every minute.
Yeah. Right, right. They're so engaged.
The engagement and the behavior change. And this is why I think it is a really good time for Snap to go public, because they've just done something to transform the way hundreds of millions of people live their lives. And it's morally great to give everyone who wants to be an owner of that the opportunity to do it. So I think they're at that stage where it makes a ton of sense.